What's going on? Welcome back. Ryan here. In this video, we're talking about volatility indicators. And again, nothing in these videos is investment advice or finance advice. This is all for education purposes only. And again, remember when I first started back, when we kind of went through the walkthrough of this software and I talked about looking at the market the right way. And remember, I had the Keltner channels set up so that we could visualize these assets and the way they move relative to their mean value and looking at standard deviations and the probabilities that price is going to fluctuate within a certain zone, right? So again, I have Thinkorswim here, and I just want to bring up some studies, right? So if we delete all these and we're going to bring up Bollinger Bands, okay? So Bollinger Bands is a common volatility indicator. It's also a lagging indicator, right? So the way that we use these volatility indicators can be to identify trends, to identify areas where we can buy, where we can identify where reversion to the mean can probably happen, right? Where, for instance, when we just look at this and we see, okay, the market started to sell off here, but when it starts to trade down into this lower band, into where this purple is, it'll then start to bounce back up and revert back to that mean price. And then same thing here, right? Where it comes down into this purple band and then it trades back up. And then obviously here we had this head and shoulders pattern, right? So the head and shoulders pattern along with the asset trading down into these lower bands provided a really good buying opportunity. And then you could see that it then changed direction and it rode that upper band all the way up until finally it kind of traded up into that upper band. And then you could see that these bands started to contract. And that's the thing about these volatility indicators, right? Is they can show us when the market is going to go from trading sideways to then making a large directional move and then also confirming when trends are starting, right? So another really fantastic volatility indicator that I love is this TTM squeeze. I think that this is a fantastic indicator, right? So if we come down here again, looking at this reverse head and shoulders pattern, right? And then we look down here at this squeeze, we can see that when these bands started to contract here, that we got this indicator down here, this TTM squeeze, these little red dots start to form. And that basically is saying, hey, volatility is about to change. The market is potentially going to release energy and a new trend is going to potentially start, right? So we can see that, okay, this thing was squeezing. And when we look at the histogram, the way that this works is when the histogram is negative and it's red, it means that momentum is increasing. Okay, and when the momentum here is below zero and it goes from red to yellow, it means that the momentum is starting to change, right? It's starting to slow down and potentially change direction. And now we have that squeeze, right, where now it's squeezing and now we're coming from a yellow histogram that's negative into a positive histogram that is a light blue color, which is indicating that momentum is strong. Now it's positive, and now you can see that you know, the squeeze fires here. It goes from uh, this red little dot here to this blue dot, and we can then see that this market then, you know, started to trend up, right? So there's like a flow to this, right? The markets, they like to go up and down and sideways. And it's really important for us as options traders to realize when the market changes, right? Because when we get into the option strategies and I show you how the option strategies apply to what we're seeing here, you're going to realize that we don't want to use certain strategies in certain market conditions because we're going to lose money. And that's the difference between really skilled traders and people who struggle, right? Is understanding what's happening, being able to notice it, being able to say, okay, something's changing here, and now we have to adjust as traders to what we're seeing to then capitalize on what's about to happen. So again, indicators are really important, right? Whether they're leading, whether they're lagging, whether they're volatility, and it's how we use them, it's how we look at the market and combine them together that's going to give us insight. And also realizing that these aren't 100%, right? There's no guarantees. We don't know exactly what's going to happen, but we can estimate using probability, putting the odds in our favor by using some of these tools and being objective, right? Being a contrarian, looking at the different possibilities that can happen and then going with the one that seems most probable. Okay, so again, really excited that we're moving through all of this great information. I know that it's going to help you in your trading, in your investing, by really exposing you to a lot. So I know there's a lot. I know that there's so much information out there, but as we move into the options and the option strategies, it's all going to make sense, and you're going to be thrilled once you see how all of this ties together and how you can use the options to put the math in your favor. Okay, so I look forward to the next video, and I'll see you there.